Series on the daily directional bias. Okay, so before we get started, I really want to appreciate the comments that we have received so far on the previous video. Okay, so I do appreciate the comments, and I'm grateful, and I'm happy that that my efforts are yielding results. Okay, so let me know if you find this video insightful. Okay, if you have a request, or you have you have a challenge that you would like us to address, or you have certain areas on smart money concepts that you are yet to understand, okay, you can just let me know, and I'm going to make a video on it. So please, if this is your first time of coming across this channel, please subscribe, okay, turn on the notification bell, and to get notified once we upload our weekly content. Okay, we upload content on these channels on a weekly basis. Okay, so now we're going to talk about the daily directional bias, which this is more like a continuation series. Okay, so please, if this is your first time, or if this is the first video you are seeing on this channel, please refer back to episode 1. Okay, refer back to episode 1 so that you get you will understand how we arrive at this certain level. Okay, so with that said, I'm done. Let us get down to today's business. Okay, so now remember, we talked about the concept of daily bias. Like I mentioned earlier, it has to do with your higher time frame narrative. Okay, once you are able to pinpoint your higher time frame narrative, you should be able to know with the with the bias you will go into the marketplace on a daily basis with. Okay, so in this example, in this case, we have a bearish bias. Okay, we have a bearish bias, and so we went into the trading for the previous week with the idea of looking for sell setups, right? So this broke structure and is reaching for this liquidity resting below this old low, right? So until price gets here, my daily bias, my everyday bias is going to be to look for sell setups, right? Okay, so that is that for that. I talked about that, and I made mention earlier that having a bearish bias does not actually mean that you are not permitted to take long entries. Okay, there are going to be days that are actually going to be up close days. In other words, there are going to be days, even on the downtrend, there are going to be days that are going to be bullish. Okay, so what do you do in such scenario? Okay, so that is what I've come to address on this episode, right? That's what I've come to address on this. Okay, so we can clearly see right here that our bias was bearish, right? So we went into we looked into each trading day of this particular week for looking for sell setups. Okay, but something happened on Thursday. Okay, which is what I want to share with us right now. Okay, so now this is on Thursday price action, right? We have the New York midnight open to New York midnight Friday opening. Okay, so this is on Thursday price action. This is a 15-minute time frame, right? So remember, I mentioned in our previous video that once you have been able to identify the direction by the order flow from the higher time frame perspective, then you go down to your intraday time frame, which is the 15-minute time frame. Then comes in the application of the power of 3, right? Okay, so remember, my bias is bearish, right? So my bias is bearish on the Aussie dollar. Okay, so now this is on Thursday's opening. Remember, we start our hunting for our London key zone between 2 a.m. to 5 a.m. right? Then for New York is between 7 to 11 or 12 at most. Okay, so now when I put up these charts, when I put up my Aussie dollar on the Thursday, okay, on Thursday of the previous week, right? When I put up this chart, this was what I got, okay. So I actually put up my charts when the new London Q zone opened, okay. So remember, my bias is bearish, and my high probability setup is to look for my sell entries above the opening price, right? So this is like the manipulation of the daily candle, right? So this is like the manipulation. So this is where we hunt for our sell setups, right? So now remember, during each Q zones we are looking for one of two things, okay. So we are looking for an old high, we are looking for when that is when we have bearish bias, we're actually looking to see an old high being smashed or be taken out, okay. We want to see a run on buy side liquidity, okay. So now price traded upwards during the London key zone, okay. So now there was nothing here, there was nothing much for me to trade off, as you can see right here, okay. So when I put up my charts, this was what I saw, okay. This was a kind of huge displacement, was just a strong displacement right here, okay. So price, as you can see, traded downwards during the London Q zone, okay, until we got outside the London Q zone. So I stopped looking for an entry, right? I stopped looking for an entry. Then came the New York Q zone open, okay. So now let's go to the next slide and see, okay. So now when the New York session opened, I was like, my bias is bearish. I'm actually hoping to see some run on buy side liquidity, right? So now, but what I have here right now is liquidity being engineered, okay. So I have liquidity being engineered right here, okay. So I have the a short-term low form here, okay, during the London Q zone, and as you can see, price was just respecting this support level, okay. So price was respecting this support level, created a kind of consolidation, okay. So there was a kind of consolidation right here, okay. So and we were below the opening price, okay. So as you can see, price was respecting this. So this is known as engineered liquidity, okay. This is known as engineered liquidity. This is liquidity being engineered, creating a kind of retail support level, okay. So and we were in the New York zone. So applying the power of 3, remember, if we are looking for our sell setups, our high probability entry is above the opening price, right? Then if we are looking for buy entries, our high probability is below the opening price, okay. So now price is currently trading below the opening price right here, okay, and we had a minor consolidation. So what this consolidation means right now is accumulation, okay. Whenever we see some level of consolidation, that is accumulation, okay. So now smart money was accumulating long position right here, okay. So we were accumulating long positions, and at the same time engineering liquidity, creating a kind of support level, okay. So now there was this, then came the next phase, as you can see right here, okay. So this was manipulation. So this was the manipulation. There was a breakout to the downside, right? So now what happened right here is that there are going to be traders that have their retail traders that have their sell stops resting below this old low, right? So now once price broke to the downside, we have their orders were tapped in, okay. Their orders were tapped in to go short, okay. So now price broke to the downside and reversed on them, creating the swing point, one of the swing points, which indicates the end of a particular trend, right? So now the swing point, as you can see right here, is a low being created, okay. Then we have a high, okay. Now we have a consolidation right here, okay. We have this consolidation and the manipulation, okay. have this old low created here. Okay, now price liquidity was being engineered right here, okay, creating a kind of consolidation. Now this consolidation serves as an accumulation phase, right? So now we have the accumulation, the manipulation, okay, and the distribution phase. Okay, so this was what actually created my entry on to look for long positions. Okay, so now I'm looking at this trading range from this high to this low. Okay, so let's go deeper, looking at this trading range right here. So now if you take a look at this trading range from this high to this low, we have above the midpoint, we have a fair value gap, right? So my intentions of going long was, okay, I was seeing this move, and I was seeing, okay, I was like, there's going to be a retracement, right? So this is a huge displacement, this is a huge displacement, this was a huge displacement actually. Okay, so I was actually looking to go long from here and exit on the 15-minute fair value gap, okay, which is above equilibrium in the premium sector of this own range. Okay, so now that was how I went long, even though my bias was bearish. Okay, even though my bias was bearish. Okay, so what am I trying to say in essence is that most of the times you have to be open to as a traders, we have to be flexible, right? Even having a bearish bias doesn't mean you are not permitted to look for you are not permitted to take long entries, although it's more riskier. Okay, it's more riskier because that way you are actually trading against the order flow. Okay, you're actually trading against the order flow. Okay, but painting the picture right here before us, you can see that the factors here are pretty much understandable. Okay, so the factors that align together, okay, the factors that align together to create this setup, okay, that to create this buy setup for me were as follow. Okay, so the price was currently trading below the opening price. Okay, right here, as you can see here, price was actually trading below the opening price. Okay, so this is our opening price, and we are currently below it. Right now, liquidity was being engineered, creating a retail support level. Okay, so this was liquidity being engineered. So you can see price respected this multiple times. Okay, price respected this multiple times. So there were actually more buyers. How am I going to put it? So there were actually those that were buying this. Okay, more buyers were coming in. They were seeing this as retail traders were seeing this as a strong support level because price was being engineered to respect this level. So this level was way too clean, right? So this level was way too clean, and much liquidity was resting below this old low. Right now, we had a minor consolidation acting as accumulation of longs for smart money. Okay, so we had a consolidation right here. Okay, so this was accumulation. So this was accumulation. Okay, so we had a minor consolidation, then we had a manipulation in form of a breakout to the downside. Okay, in which retail traders are going to have their sell stops activated, thereby taking the counterpart of the smart money long position. Okay, so now as you can see, we had the consolidation, which is the accumulation phase. Then we had the manipulation, right? We had the manipulation. Those that saw this as a strong support level that bought, okay, their stop loss is going to be taken out, and those that had their sell stops below here, their orders are going to be tapped in, right? The others are going to be tapped in right there. Okay, so then we had a fair value gap in the premium side, which the algorithm will seek to rebalance because price surged in one direction, creating a huge displacement, otherwise known as the buy side inefficiency. Okay, so now like I made mention earlier, we had this as a single price leg. Okay, remember my bias was bearish. Okay, so and before now I was really expecting to see during the London key zone or maybe during the New York key zone an old high to be taken out in order for me to go short, but as we can see here, there was nothing of such, right? So we had price creating a displacement surged. We had price surged upwards, right, and dropped aggressively. Okay, so the process of dropping, so this was like a retracement. I was like, okay, we are going to have a retracement to this fair value gap, then maybe a continuation to the downside since we are currently bearish, sorry. So I was seeing this as a retracement, so I decided to get in on this short-term retracement and get out at this fair value gap, right? So but what actually happened was that by the time price got to this level, I was already the time factor has already gone too far, right? So this is probably around after 8, if I'm not mistaken. This should be around after 8. I'm not conversant with 24-hour time, okay, but this should be around 8 p.m. New York time. So that is way out of the algorithm. Okay, so your afternoon section trade should be between 1 to 3:30 or 4 p.m. at most. Okay, that is when you look for your afternoon setups. Okay, so now, but this is already way too out of the time of day that we hunt for our setups, right? So I was like, okay, I decided to take off some positions and leave the order running overnight, aiming for this external range liquidity. Okay, so now how do I aim for my TP? Well, most of the time what I do, I put into consideration the two type of liquidity we have. We have the internal range liquidity and the external range liquidity, right? So I was like, okay, if this move is going to continue going up, I didn't know for sure if it was really going to go up to reach for this old high. Okay, but I pretty much got my order filled right here. Okay, I was aiming for this fair value gap as a retracement to continue lower. Okay, so that is the factors that came together to create the long entry I took down here. Okay, so now let's break this price action down. Let's break it down. Okay, so now this is the opening price. This is liquidity being engineered here, right? So now we have the manipulation. So this is the accumulation, the manipulation, right? So now when price traded below this old low to grab liquidity, that was when I went down. By now you should have known that I love using the 1 minute time frame. Okay, so the 1 minute time frame is my go-to lower time frame, right? So but this is a 3 minute time frame. I'm going to show us from 2 different time frames. Okay, so now we have the same pattern, swing points being created here. Okay, so now you can see from what we have talked about so far, the importance of the swing points, right? You can see the importance of the swing point. We have a low being created and we have a lower low and price, so this was like a run on liquidity, right? So the same pattern we can see is being created here. Okay, so we have this low and a lower low, okay, and a shift in structure, right? So we have this shift in structure to the upside. Now price created this price leg. Okay, so there was not much of a retracement. I didn't get in right here. Okay, I was like, okay, I'm expecting, although I could have gotten in right here, but I decided to wait for more, for price to give me more evidence that it really wants to go up. Okay, so now price went up. Now looking at this trading range from this low to this high, price went up and started retracing. So my interest was on this fair value gap because it is below the midpoint of this range. Okay, it is below equilibrium, which is actually in the discount sector. Okay, so I bought right here. Okay, so this is where I bought. I placed my long entry. I placed my pending order right here. Okay, so now guys, it is very important that when trading with the fair value gap, if you are looking for a buy entry, okay, when placing your limit order, for buy setups, okay, your pending order should be right below these candles, the first, or is it the third? Okay, no, this is the third candle, right, for long positions. Okay, so your limit order should be right below these candles. Okay, so this is be right below this third candle's low, okay, so that you will get filled in. Okay, so this was where I got in. Okay, so now going down further, you can see I got in right there. Okay, and my stop loss was below this old low. Okay, so now that is a good number of pips. Okay, so I was actually looking to go short from this fair value gap. Okay, so I got out right at the lower part of the 15-minute fair value gap. Okay, so that is a whole that's 42 pips. Okay, that's 42 pips right there, and using a 29 pip stop loss. Okay, using a 29 pip stop loss, that's a risk to that's 2 to 1 risk to reward ratio, right? Okay, so that is just how it goes. Okay, now going down to the lower time frame. Okay, going down, refining it to the 1 minute time frame. Okay, so this is my go to lower time frame. Okay, so this is the time frame I use out of 90% of the time, okay, for my entry. Now you will get to understand why I use this for my entry. Okay, so now we have the second swing point pattern we created here. Okay, so we had a low, a high, then the failure swing. Okay, we had a low that failed to go below the previous low, okay, creating a higher low instead, then the shift in market structure. Okay, so we had this move upwards, the shift in market structure, and we have this fair value gap. Okay, so I got in right there. Okay, I actually used the 1 minute time frame, okay, for my entry. But one thing you should note is that if you have your shift in structure on the 3 minute time frame or on the 5 minute time frame, there it is not actually necessary on going down to the lower time frame. Okay, you can just use that time frame for your entry. Okay, so now this is where I got in, and as you can see, we have a 56 pip. I got 56 pips actually, okay, from this trade using 23 pip stop loss, right? So now considering this, you can see that our what is it called, our risk, okay, this is actually 14 pip stop loss. Sorry, this is actually 14 pip stop loss. Okay, so this is actually 14 pip stop loss. Okay, and 42 pips take profit on the 3 minute time frame. Then as you can see on the 1 minute time frame, we have a 6 pip stop loss and a 56 pip as our take profit, right? So comparing these two time frame, you can see the 1 minute time frame offered a more, a more return, a huge return compared to the 3 minute time frame, right? And even smaller risk. Okay, so the risk on the 1 minute time frame is is smaller, is lower than the one on the 3 minutes. Okay, so that is how you find out your time frame for your entries. Okay, so now the takeaway from this is actually I'm actually trying to let us know that even when we have a bearish bias, okay, like we can see here, actually you have to be flexible at times. At times you have to be flexible in the sense that maybe there are going to be days that the only setup you are going to get is going to be actually against the order flow. So assuming I hadn't take this long position, I wouldn't have had a trade on Thursday at all. Okay, so I wouldn't have an entry, I wouldn't have had a trade. Okay, but it's still okay. Okay, it's still okay if you don't really get a trade, because day trading does not actually mean everyday trading. Okay, there are going to be some days that you just have to sit on the sidelines. Okay, so let's say you are totally new at this, okay, and you were not able to get this move, you are not able to get in this move, in this retracement upwards. It's totally fine. Okay, you can just wait for the next day. Okay, so that is one way of doing it. Okay, you don't have to force yourself, you don't have to force trades. Okay, so I actually saw this, and I just decided to share it with us. Okay, but I'm not actually advising you to trade against the trend, the other flow, if you are new at trading. Okay, if you are just starting out, it's probably the best if you stick with the trend. Okay, so that is just it. So I hope you have found this video insightful, and I hope I've been able to cover one or answer one or two questions we have. Okay, so if there are any more questions, you can leave a comment. If you enjoy this video, if you learn one or two things from here, you can actually leave a comment. I really appreciate. And please, if this is your first time, please subscribe to this channel, turn on the notification to get notified once we upload our weekly content. Okay, so that will be all for today. See you guys in the next class. Have a good trading week.